So let's bring in our market panel. Joining us now is Vital Knowledge founder and president Adam Crisafulli. And we're going to add in CNBC senior markets commentator Mike Santoli in just a moment. But Adam, first, I'm going to go to you. The fact that at least at one point within the trading session, we were looking at the worst day for the Dow and the S&P in almost a year. We had that hotter than expected CPI reading this morning. Also some mixed to disappointing earnings reports as well. And really an aggressive move higher in the bond market and treasury yields, too. Walk me through it.
No, absolutely. This was kind of the fourth hot inflation number for the month of January. After the jobs report, you had both ISMs come in hot, and now you have this CPI. So I think the question people are asking themselves is, does this derail or does it delay the advent of monetary easing? So I think March is off the table as far as a potential rate cut. But I think their trajectory is still one of disinflation and one that's going to lead to the Fed cutting rates in the first half of this year alongside a slowdown in quantitative tightening. But I think you came in today, especially in tech, overbought, overcrowded. Valuations were very rich, above 5,000. You had a very aggressive rally, just to kick off this year. And I think the combination of the CPI plus a bunch of underwhelming earnings, like you mentioned, it was just too much for the market to bear, and it had a pretty violent pullback. I think that this is not kind of the start of something deeper. Like I said, unless you really see the inflation trajectory shift violently, where you have goods inflation really start to move up again, and services and shelter costs fail to break lower, which you didn't really see that within the CPI today, then I think kind of the multi-month trend is still on track. Okay. So basically, we're due for a pullback, and that is a conversation we've been having here on Overtime for a number of days now. But just to go back to the 10-year yield, I mean, we have that old saying, right? Don't fight the Fed. The market, you could argue, has been fighting the Fed, especially where it's been pricing in rate cuts for months, and little by slowly moving back towards what the Fed's been saying all along. We saw more of that in action today, and up until today, where we did see stocks trade lower, we have seen, for the most part, equities pretty buoyant, even as we've seen that repricing happen in the Fed funds futures. How does that continue to play out? No, I agree. And like I said, I think the real question is this delaying the advent of easing, or does it really derail that whole thesis and we have to wait until the second half of this year for rate cuts to begin? And I think, again, it's more the former than the latter. So the market's priced out rate cuts at the next two meetings. It's pretty much aligned with the last supplemental that we got in December from the Fed as far as kind of how they're projecting easing for the course of this year, which is about 3 cuts. So now we're kind of, again, we're moving into the summer where the market's pricing a cut. I think the Fed is probably okay with where things stand right now. Again, after they pushed back pretty aggressively for the last several weeks. Yeah. And now it's, just a question of watching how the data comes in. Remember, if you listen to Powell, it wasn't so much that he needs inflation to get better. It was he wants it to kind of stay at the same trajectory on that same disinflationary pace. So if we continue to see that, then I think that means we can still get cuts within the first half of this year.
So, Adam, what are investors watching for now is my big question. Normally, I would look to macro data, but I can't help but look at NVIDIA, which is reporting earnings in just a few days. It didn't want to be down today. It ended basically flat. And that other, AI name that we've been watching closely, Supermicro, was actually up 2.33% on a day like today. People don't want to sell these names, even if they are selling the WCLD, if they're selling, the real estate sector, et cetera. So how much hinges sentiment-wise on those kinds of names?
It's hugely important. So we get the start of the January earnings season, kicks off tomorrow night with Cisco, and then you get AMAT Thursday. But like you said, next week is NVIDIA, and that's going to be, it's crucially important. This is, those super cap tech stocks are driving the entire market, and the AI thesis is playing a huge role in that entire sector, the narrative around it. And so NVIDIA is going to be crucial next week to watch. You also get the Fed minutes next week, which will be also very important. But there aren't a lot of really major macro events on the calendar. We're kind of done with calendar quarter earnings. So it's going to be the January earnings season, which we start again tomorrow night, and then just the next several inflation numbers. So we get a couple more this week, the PPI, import-export prices, Michigan inflation expectations on Friday, and then you get the Fed minutes next week, and then just more of these January end reports. NVIDIA being a big one, but also Walmart, Home Depot, You get a bunch of big, important retailers also. So all that's going to be very important. But yeah, NVIDIA next week, will be crucial.